Looking for the cells right here. Let's see if we get tapped in. I think that's what I hate about holding trades overnight or going to sleep on trades. You can't really sleep. Just got tapped in. Let's go. Up $100 right now. 500. TP2 hit live on camera. 5 minutes for TP2. TP2 caught live with the game. So we about to start the live with the VIP. It's still pretty early. Today we're running a podcast style VIP session. We're gonna see what we can catch, jump on the charts with the VIP and our special guest for the day. It's gonna be really nice. I hope this new segment that we're introducing to the VIP sticks and lands very well, because we're gonna try to implement it more. But if it doesn't, it's just an idea, and we're just gonna keep doing forward. We'll scrap it and just keep moving forward. But let's go with the VIP. Let's go.
For those of you that know me or that don't know me, I'm Bells. It's been a long journey, bro. It's almost 6 years. It's 5+. We're going on 6. I joined Andre's group back in 2021, 2022. The trading journey was always hard for me. I was always somebody that was very greedy. I always wanted to be a millionaire overnight. So of course the trading journey went a little bit longer than it should have for most people. But it was well worth it.
Like trading is the one business where you will lose money. People don't really. You will lose money. You just as much money you can make, you will lose. You will have people. How much you make? Now you should be worried about how much I lost. Are you willing to lose 5,000 in a day? If I say that, you're like, yeah, maybe it's not for me.
So can I ask you a question, bro? What makes you so confident to take trades that can end up into a $20,000 day, $15,000 day, $10,000 day? What gives you? Because I've been trading for around the same time as you, maybe around 5 years right now, and I'm gonna confidently say, 500 to 1,000 is a lot for me to make in a day, and I'm comfortable, I'm content. But what makes you go for these $15,000, $20,000 days and just be like balls to the wall? Well, so just hopped off the call with the VIP. Listen, we was running a kind of like a podcast style with the VIP. Was trying to mesh them together where we were doing the same thing, looking for trades, taking trades while interviewing someone live on with the chat. 100 plus people watching us do our thing and listening to our guest speaker. Our guest speaker was Bells, but people don't know him. The world don't know him. We know him. So you guys get to meet him too. And I'm going to leave his description in the bio if he gives it to me. But it was a great VIP. I can't lie to you. Great VIP session. I caught a trade, but I took very low risk because I know I was talking to my guest speaker, which is Bells. And I didn't want to risk my regular amount because I know I'm probably high probability I'm probably not going to be paying attention the whole time. So I didn't want to take a trade where I wasn't going to pay attention to it to manage it and then lose the same amount of risk that I would take per day. So I lowered the risk. It's cool though. I think I made like $75 for the day. It's a calm day. It's a calm day. I'm not tripping. I'm not worried about it. It's just another day. We just do what we got to do and keep going. Right now I'm about to just finish. Keep going about the rest of my day. I have some work to do. But that video for the vlog is going to drop. It's probably going to drop before this video drops because it's just an easy, not the vlog though, on the podcast. It's going to drop before this vlog because it's an easy drop, man. It's an easy 1-2 video. Let's drop it. You feel me? So, about to go about the rest of my day. Come with me. So, as I was about to leave, I'm like, where am I going? I didn't even do a breakdown for the gang. I didn't even show people how I caught this TP2 on this trade. How disrespectful is that? I didn't give you guys game today, for real. I get that I had the podcast where I had Bells spitting game, but I didn't give you game today? That's crazy of me. Tell me that's not crazy of me. That is. So, I got to give you the game, right? I got to give you the sauce. I got to show you how I was able to catch this TP2 trade. It's only right. It's only right. I have to give it to you guys. I have to. So without further ado, let's get into the breakdown. Let's go. So as you guys can see, I caught this trade right here. TP2 stupid fast, less than 5 minutes. TP3 would have been hit in less than 6 minutes, really. But I caught it on the what is this? The micro or the mini? What is this called? This is the micro. So I caught it on the micros. You see, it's right here. It wasn't a lot of risk, as I told you guys. It wasn't a lot of risk that I placed on this trade. TP2 happened stupid fast. TP3 would have happened even stupid faster, but it is what it is. As I said, it's just one of those days I wanted to lower the risk because I know what I was doing and I wanted to control my risk. So let's get right into the breakdown. Let me go back to YM1 and then we'll just start the breakdown from there. I'm gonna do the bar replay tool, go back to what it was looking like during the day, and I'm gonna remove all the drawings. So as you guys already know, where do I start? If you don't know, if you're new here, I always start on the 1 hour time frame. I always start on the 1 hour time frame. Why do I always start on the 1 hour time? Because I'm a scalper, really. I don't need to go on a higher time frame. I want to take trades. I want to be in and out. So I'm a scalper primarily, honestly. So it's like, do I need to see a high time frame 4 hour charts? I don't. You know, the 1 hour is more than enough information from the higher time frame for me to make decisions from. And then I drop down to the 15-minute time frame, and then the 1 minute time frame is where I enter in. So from the 1 hour time frame, what do I look for? I look for structure, right? Structure is the main basis point of how I trade. It's like the basic fundamentals of how I trade. What is structure? Higher highs, higher lows, lower highs, lower lows. That's structure. Don't get no simpler than that. Don't get no easier than that. That's structure right there. Higher highs, higher lows, lower highs, lower lows, structure. So let me draw it out for you, right? On this time frame, this is the 1 hour time frame. This is the low, right? There was a lower point than this, but to let it fit on the chart, I'm gonna just start right here. So low, we created a high, then we created a low, then we created a new high, higher high, then we created a new lower low, right? Or this wouldn't consider the lower low until price breaks above, but we know at least this is the new higher high. So I wouldn't consider this a lower low yet because it didn't create it, because it could just easily, as well as it created a low right here, it could just boom, go down here, then it create a new lower high, boom. So this would be like the lower low, boom, lower high, lower low, lower high, lower low. So this is an undecided point right now because we don't know if price is going to go higher or lower from here. It looks like it's going to go higher as I came into the day. So I'm going to just draw out the areas of interest that I thought was powerful. So all of my areas of interest, I draw on the 1 hour chart time frame. I draw them in the purple box, right? I like to make them purple. So boom, that's purple. Another area of interest would be down here, right there. Another area of interest would be like right here. Why right here though? Because you can see, like if I bring up the charts a little bit, you can see that from down here we created a low, created a high, created a low, created a high, new low, new high, then we continue. You see, so it's the low from right here, the high from right here, the low from right here, the high from right here. It's just the areas of interest, the most recent lower lows, lower highs, higher lows, structure points. The most recent ones is the one I mark off, the ones that haven't been ran through yet. Like you see this high up here, this high up here has already been ran through by price here, so it's already been disturbed. You can see it wasn't respected, so this area right here was not respected. It came up here and created a new high. So I don't want to draw that anymore because it's not important to me. But you can see down here, when price came down here and created a low, it was respected down here. When price came up here, created a high, you could move over to the left and you could see it was respected right here. Right, price didn't go any lower. It was respected. So it's still a respected structure point. You can see when price came up here, it got respected again right here. So when price gets here again, I'm expecting it to do the same thing, respect it, drop back down. So that's all the areas of interest I draw on the 1 hour charts. So again, I know I say this in every video, but in this video, I have to, there's new people in every video. So how do I draw my areas of interest? So based on the most recent respected structure highs, structure lows, I like to draw just the areas of just the wick, the highest point that candle went before it dropped off. Like for example, you see this candle right here, right? Price came down here, created this low. This was the lowest point price went before it would push back up. So I want to capture the lowest point of the candle's wick and the lowest point the lowest point of the candle's body and the lowest point of the candle's wick. I know that the sellers were here. How do I know that the sellers are here? The buyers are here. How do I know that the buyers are here? Because when the buyers came down here, when price came down here, the buyers pushed markets back up, created a new high up here, right? After it created a new high up here, what happened? It came back down to who was down here? It came right back down to where? Here. Who was down here? The sellers. So when price came back down here, what happened? It was respected. And how do we know it was respected? It pushed up and created a new high right here. So boom. Now price came back down. It wasn't respected here. It wasn't respected here. But when it pushed back up here, who's up here? The sellers up here. How do we know the sellers up here? Because they took price back down. So now when price came back up here again, you could see in this big candle, price came back up here, it dropped again. So it dropped right here. Oh, it looks messy now. Let me get rid of all of that. So when price came up here, it had a little drop. Then it pushed up again and it tried that area of interest again where the sellers are located, and it dropped. It had a bigger drop. Now price came down here and established the same low that was the high at this point. It's being respected now. You can see this is where the candles, the highest point that the candle's wick was. You see that? We know that all the sellers were here. Now that area has been turned into where the buyers are located, right? The sellers were once here, but they lost the fight. So now when price gets back here, who's here? The buyers, because they took over. When price, you can see price just shot up. It just shot up right here. No stops. It didn't not one candle turn back. This is all green. Well, let's call it bullish, because I don't have no colors on my charts. So it's bullish candles. All bullish straight through it. So you know the buyers took that area right over clean. So when price got back here, the buyers are located here. So when the buyers stepped in, when it stepped into the buyers' areas of interest, they took it back up. They took this John back up to who was here? Who was here the last time? Sellers. So now the sellers are up here. So we're going to see what happens up here when the sellers, when the buyers meet the sellers. Does the buyers win the fight or does the sellers win the fight? That's who I want to know. That's what I want to know. And my bias is up here. When price gets up here, because the sellers were here the last time, so my bias is going to be sells. Why? Because they won the last time. Only if the buyers just shoot right through it, I'm going to believe that the buyers own this area. But as of right now, I'm rooting for the sellers to win again. Why? Because they won the last time. They won the last 2 times, right here and right here. So that's why I mark off only the candle's wick of the highest candle in that area of interest based on structure. Now that I explained that, I drop down to the 15-minute. Let's do the same thing. We draw structure from the lows to the highs, right? You can see this is the lowest point of the day. Price came up here, made a high, made a new low, made a new high, made a new low. So we know they had a high here, a low here, a high here, low here, right? Where's the areas of interest that I really do want to mark off? But this area right here is not definite. Why? Because it didn't push up and create a new high, or it didn't drop down to create a new low or something like that. So this area is not definite. I'm only going to mark off this area and this area because I know the 2 definite areas that, are stapled, that are the most recent structure highs or lows, which is right here. So I'm going to just draw off the highest point that the candle's wick went to, which is right here on the 15-minute time frame. I like to make my 15-minute areas of interest orange and down here. Right there. So these are the only two areas of interest that I wanted to catch. Why didn't I draw this right here? Because when price got here, it just went up and went higher, created a new higher high. So this is not a respected structure point. I only want to use the last previous respected structure point, not anything else that's our price already ran through. We can already see that the sellers didn't win here no more. The buyers took over. They already created a new high. It's not an area of interest that I want to pay attention to anymore. But you can see when price came down here, what happened when price came down here? You can see this is the lowest wick. Price pushed up and created a new high right here. What happened again when price came down here? You can see it. Price barely tapped this area of interest, but what happened? Shot back up into the area of interest for the sellers. You feel me? This is just structure. It's just showing you who's winning the fight. Who's winning the fight in these areas of interest, right? That's all I want to identify with my structure points and my areas of interest. I want to know in which area is a buyer more likely to win a fight or a seller more likely to win a fight. You understand? So this is why I draw off these areas of interest, and I make them color coordinated because I believe that the 1 hour area of interest is stronger than the 15-minute area of interest. Why is the 1 hour area stronger than the 15-minute area of interest? Because it's just a bigger time to be in an area. So the 1 hour area of interest, how long it lasts in that area of interest might be like an hour, 2, 3, 4, 5 hours, you know? For the 15-minute time frame, it might be 15 minutes, 30 minutes, 45 minutes, an hour, maybe. But the time span of it being in that area where the fight is happening is shorter on a 15-minute time frame, which makes that area of interest not as strong as the 1 hour time frame. But I still take both of them. If a trade gets to both of them, I'll still take it. But I would lower the risk on the 15-minute areas of interest, and the 1 hour areas of interest, I'll be more confident in taking a trade, right? So now let's drop down to the 1 minute chart and let's fast forward it down to 9:30, where I only take trades after 9:30. I don't take trades before 9:30, only after 9:30. Why? Because 9:30 is when most of the volume comes in, and I don't want to trade before most of the volume comes in. I want to wait till the volume comes in. I used to trade before most of the volume came in, but I don't do it anymore. So the 9:30 candle happened. You can see wick. I'm waiting for price to boom. Boom, you can see that price came up here. So as I said, I already knew this area, and I was in the middle of a podcast. I wasn't even paying attention to this area. It wasn't even an area that I wanted to take too much. But the big part of this area of interest on the 1 hour time frame is its confluence with the liquidity above the highs. So what rests above highs and lows is liquidity. Price likes to run liquidity. So up here, where the sellers were winning, who has their stop losses up here? Sellers have their stop loss. So when price went down here, most sellers have their stop loss up here because they know if price gets back up here, I want to be out the trade. So they put their stop loss up here, which means that there's lots of liquidity up here. So when price gets up here, I'm looking for price to run the liquidity from the left because that's where most people have their stop loss, and I'm going to look to take it for a short-term sell. Because I can see that the trend is upwards. But I'm a scalper, so I don't need to be in the trade too long. I'm in a trade usually 10 minutes or less. So now let's drop back down to the 1 minute now that I explained that. On 1 minute charts, we hit that 1 hour area of interest. But I'm looking for the run of liquidity. I'm looking for the run of the highs. Why? Because there's liquidity there. And it just gives me a higher probability chance of hitting TP because liquidity was ran. So that means that price now have some liquidity to go back down, even if it's just short term. So boom, price went higher. You can see the price finally ran the highs. So now liquidity is cleared from the highs. So now I'm already saying, all right, liquidity is cleared. We're in the area of interest. Now where I'm going to look to take a trade, like something like this. Stop loss is above the high of the candle, and then I'm looking for what? How do I get into a trade, right? How I get into a trade is if price comes below the close of the open of the high the high or the low of a candle. So basically, this is a bullish candle. So the low is down here. So once price closes under here, the low, that indicates to me that the sellers has stepped into the markets to now take the markets back down. So we have multiple influences here. We have an area of interest. We have liquidity being ran. And then if price closed below that candle, we also know that the sellers has jumped in. So that's like 3 confirmations to say that this is a very strong trade to take. And I'm going to take this trade as soon as it happens. So let's see if the next candle is the one that do it. Nope, the next candle wasn't the one that do it. I think I did it like this. Yeah, it was like this. So I was risking the amount of points I was risking on this trade was nothing. I was risking what, 28 points on this trade. That's a tight stop loss. I should have went for TP3, but as I said, I was on a call with the VIP with Bells as our guest. I wanted to be attentive and ask some questions and not really focus on the trading part. So I just took, I would have upped the risk and probably had a lower target, because if I'm risking 28 points, I can easily get 90 points down here. I can easily get 86 points down here. Easily. Price, US 30 moves 100 points in a sneeze. Just like that. Especially when volume's hitting after 9:30, or even the 9:30 candle can move 100 points. So this was a very low, I wouldn't say low risk, but a low risk to reward. So you could have risked this 28 points for easy 90, 100 points easily, which I'm going to show you right now. So I'm gonna put my risk to reward tool. I like to make all of them colorful so I can give you guys some illustrations so you can see TP3. So price did what? Boom. Dropped. That was my confirmation that what? The sellers has stepped into the markets, and I want to now get in. What am I waiting for? I'm waiting for price to come back, retest the area, take it back down. Simple. I don't make it complicated. Simple. Retest the area, take it back down. Now what? Look. Very next candle, tap me in. The very next candle is 950. Let's see. So 950 hit, right? Tap me in. 1, 2, 3. 3 minutes. TP2. 3 minutes. It took 3 minutes to hit TP2. That's nuts. I'm not gonna lie to you. As I tell you guys, I'm a scalper. So I'm definitely gonna just call myself a scalper from now on, because most of the trades, they don't last that long. So I'm just a scalper now. But 3 minutes. 3 minutes TP2. 4 minutes TP3. Not bad, right? And I did this. I made what? $75 in 3 minutes. Honestly, if I put the actual risk that I would want to risk on this trade, I would have made $500. $500 in 3 minutes. But I didn't. As I told you guys, I explained it too many times already. I just didn't. I still made money though, but I didn't. In 3 minutes, bro. 3 minutes. $75. 3 minutes. Sitting down on a podcast with the VIP, over 100 people watching me trade live in 3 minutes. Come on, I was juggling so much stuff, and I still did it. 3 minutes. Come on now. Sitting around the charts for less than an hour. Look at the time. I was around the charts at 9 o'clock. It's 9:54. 9:53, really. So sitting around the charts, let's call it for 54 minutes. I really don't even start trading till 9:30. So I would say 24 minutes is how long I was actually looking for a trade. And in 3 minutes, I got TP2 to get hit. TP3 would have been hit in 4 minutes. And I made $75. You feel me? It could all be so simple, bro. And please don't look at my $75 as insignificant money, because trust me, $75 in less than an hour. People don't make $75 in an hour. Who makes $75 in an hour? A doctor, a lawyer, people who went to school for 8 years plus. Who makes $75 an hour? It's not normal. It's not normal. So you gotta really calculate the money and equate it to what you're actually making. How much are you actually making? Minimum wage in New York is $15 an hour. Somebody would have to work 4 hours of their life to catch me up. And I was sitting down for less than an hour, chilling on live in my shorts, in my beanie, and my shirt, chilling, talking to the gang in front of 100 people, chilling. 3 minutes. For me, I don't have to even leave my house. I'm right here. I'm chilling. I was drinking my cup of coffee. I don't even know where I put it. Chilling. Come on now. Tap in.